Hello and welcome. You're watching Closing Trades here on ET Now. I'm Harsh Saita. Let's bring on board the management of Chennai Petro. We have with us H. Shankar, who's the managing director of CPCL, joining us this afternoon to give us a sense of what this Navratna status means. Great having you here, Mr. Shankar. First, give us a sense. Does this accelerate approvals for you? Does it bring down debt funding, if at all, that you're going to be using that for future growth? What does this mean from a company standpoint?
Yeah, thank you very much for having me on the show.
Great having
The Navratna status provides us a very beautiful platform to accelerate our growth journey, and it gives us a very special status in the public sector space that we are recognized as a very strong company with a very strong growth prospects also available with us. We have done consistently well since the COVID times. So immediately after that, our performance has become really exceptional, and the team has really taken up this as a very great opportunity for us to grow further. And this bestowing the Schedule A status about 2 years back, August 24, we got the Schedule A status. And now in July, 19th of July, we got our Navratna status. So that puts us in a very comfortable and a very happy situation for the entire CPCL family. So to begin with, what importance it is, it gives us greater autonomy at the board level to take up projects at a fast pace. We can look at our capex without any kind of a limit. We also have some freedom with respect to joint ventures. So this is a very tremendous responsibility on the board to take these projects very fast. And we will be evaluating all our new proposals that are going to be coming up in short, so that they really mature fast and we are able to drive the growth in a faster pace.
And was slower decision-making hurting growth? That's what one of our analysts who tracks you closely also seems to be checking with you on.
No, I would not say that. See, the point is, earlier as a mini Ratna company, we had a different two levels of approvals. One at 500 crore, we could definitely do it within CPCL. And beyond that, it has to go to our parent company, Indian Oil. And we got tremendous support from Indian Oil. And because they are aware about this whole business, so there was never any kind of a deficiency. But the fact is, 500 crore today, if you look at the typical oil and gas industry, 500 crore is a number which doesn't give you the kind of real big projects to be implemented. So this gives us a better position now that when we are looking at some marginally good value addition projects, then we will be in a position to take up these approvals quickly. And because whenever you talk about value added products, time is the essence of those kind of projects. So that gives us a good position to really work on.
Give us a sense of the capex pipeline. You've got a very large capex pipeline, around 2,000 crore odd. Talk to us about the timelines and the funding mechanism. Does this basically accelerate the capex? Does it allow you more flexibility with regard to funding? Does it provide you funding at lower costs? And if so, how much lower?
Yeah. Just to give you a flavor, like we have now entered into a project execution phase for production of specialty grades of lube oil base stock. So that is the project that we have now been recently awarded the approvals. So we are going into the implementation phase for that project. And as you have been, you're aware that we have moved into a very strong position with respect to our debt equity position. Like if you were to track our past record, then you should be able to see that from a position of almost about 8,000 crores of debt or 9,000 crores of debt, we have moved down now to close to less than 2,000 crores. Our debt equity position is at a best position in the refinery now, and we are almost less than 0.2% of debt equity. So that gives us a good opportunity to expand well, to really plan our projects and look at our what are the options available to us with respect to the position that we would like to borrow money for new projects. We are also thinking about some good sustainability initiatives which will give us the opportunity to tap the green funding mechanism. So this Navratna will give us that added impetus to really move forward and go for a great bargain with respect to these kind of specialty projects which are going to be a sustainability drives.
Give me a number, Mr. Shankar. What will how much better?
So numbers is really, see, we have to really negotiate those numbers and come up. And we are very positive about it because if you look at the health of the company with respect to its net worth and with respect to the the kind of EPS that we have, the kind of the market presence that we are doing in the market also, that if you could see, I'm quite sure that we will be able to get the best margins that could be available to any of the good companies.
And with regard to the capex itself, does this therefore give you more confidence to increase the kind of capex guidance that you've given, accelerate the current capex that you're doing, any of those?
Yeah, currently we are in the process of implementing a project which is close to a 1,600 crores investment, and that is spread over a period of 28 months to commission. So that is one area which is biggest project that we have in hand. We are also working on capacity expansion, feasibility studies. We are looking at specialty products to drive the margin business. We are also looking at some sustainability initiatives, especially with respect to CO2 capture, which would also be a good product for us as a feed we can give to the neighboring industry. So there are a lot of opportunities available now with us, and with a very healthy debt equity position that we are now looking at with in our balance sheet. I think we have a tremendous appetite now to invest high in these kind of special area projects.
You had suggested that West Asia will impact you in a certain sense. I'm going to move away from that discussion with regard to capex, etc. Is that impact now behind us? Is a bulk of that impact behind? Is there now a much better clarity on how business is emerging?
With respect to the West Asia crisis, I would say that typically we were operating with a 50% on term procurement and 50% on spot procurement of our crudes, which was being procured to us, supplied to us through the Indian Oil, our parent company. So in this matter, what has happened is during this crisis, we have been able to try out the different grades of crude, and it also gave us much more strength to optimize our production abilities. And we have become very flexible with respect to the operational areas. And although we were processing a very, the opportunity crude was becoming more than the term crude during this last 3 months, our mix was really good, and we were able to sustain the LPG, HSD, and MS productions at a very high level. And we have consistently operated around 100% capacity during these last 3 months. So this crisis really helped us to also strengthen our own mechanism, our own operational abilities, starting from the time about 4 years back when the Russian-Ukraine war started to now. We have tried out various crude combinations. So that operational flexibility has really been the hallmark of our performance during this period.
And are we still sourcing crude from Russia? How are we sourcing crude, sir? If you can give us a perspective of that.
No, right now there is the opportunities available for all the companies to source the Russian crude. So Indian Oil has been supplying us we have been able to get the Russian crudes to good numbers during the last 3 months because of the crisis. And also we have explored the opportunities through the West Asian crudes, which are also available to us. And we have tried new crudes. Almost every quarter we are trying out 2-3 new crudes, and we are adding to our basket of already 170 crudes that we have processed. Every quarter we are adding 2-3 more crudes to our basket.
Okay. And with regard to, you had suggested that the West Asia crisis will impact you. Do we have a quantum with regard to the impact, and that impact will largely come to you in Q1 FY27? Is that the right way to think of it? And what would that impact be in terms of numbers, if you can help us quantify that?
No, numbers is too early now to say, but let me give you a flavor. After the war has ended, we can say that roughly the crude prices have fallen close to $20. But the impact of that is not really immediately felt. It is actually we have already tied up with our crudes for the next 1 month cycle, because we cannot really have crudes coming in at short notice. So we have crudes lined up to be coming in now up to the, say, July mid. And what we have done is this crisis, we were operating at a very, very low level of crude inventory. So that kind of flexibility in our operation, and that kind of the just-in-time kind of a technology that we were operating at the crude level, it has really not really impacted us to that extent now. Numbers are too early to predict, but at the end of that, you can say that maybe Q1 it will not be felt that much. But let's see, work out and come back because we are just another 1 week away from the end of this quarter. We should be knowing it soon.
And debottlenecking, that's something that you've been focusing on. How much of that has started to already come underway, and how will that benefit in terms of, if you can give us some quantifiable numbers on how this is playing out?
See, debottlenecking is a part of our regular operational areas. We were operating close to 100% production capacity during just immediately after the COVID. But slowly we have ramped up our all operational cycles, and we are now operating close to 110, 112. Last financial year, you have seen that against a nameplate of 10.75, we have done 11.7 on the crude capacity, the crude utilization. So we are also looking at various options to maybe expand our nameplate capacity also by debottlenecking some of the primary units, adding some new secondary units, which is all under the feasibility study now. So we want to really expand, because we haven't expanded our capacity on a nameplate level since last 20 years. So we really want to move to a different level now. So we are looking at debottlenecking as one of the areas, because as you are aware, the Manali area where our current refinery is existing is already we are starving for land. So additional land is not available. Therefore, we would like to utilize the existing facilities and do the debottlenecking.
And companies demonstrated improvement in GRMs in Q4. Brokerages, though, believe that earnings are to have peaked along with the refining cycle. Where are we, sir, in terms of the cycle? And how are GRMs behaving in Q1 FY27?
The Q1 I cannot summarize right now to you, because that is still under, it's a work in process now. But let me just also tell you that Q4, what we saw, and the demand has not been actually eroded. There is still demand for all the products. The crude basket, you will see the cracks that you are seeing, there has not been great difference in what cracks we have seen in the Q4 and currently what we are seeing. Although last 1 week there has been a little bit of downward trend. But what the current mechanism, what I feel is that looking at the demand scenario, these are expected to remain. That is what is our expectation. And looking forward to that only, because then that will give us a good performance for the Q1. So if that continues, we will carry forward the momentum that we gained during the last financial year. We will be able to take it forward to this financial year also.
Mr. Shankar, thank you so much for coming in and speaking to us, giving us that perspective, and many congratulations once again on that change in status.
Thank you so much. Thank you.
All right, viewers, what we'll do is slip in a very short break. Come back, plenty to talk. Markets are buzz. There's a lot to speak about. Stay with us here on ET Now.